It's time now for the morning trade, and we're watching Shopify. It reports its earnings tomorrow morning. And, don't underestimate the American consumer and how they spend. But let's see what Shopify may be giving us in a preview with Caroline Woods joining me right now here on set.
Hi, Nicole. Yeah, Shopify share is actually higher today, up about 2%, but they've been under pressure so far in 2025, down about 10% year to date, still up about 53% on a one-year basis and about, call it, 26% off the 52-week highs. Reports earnings tomorrow before the open. In terms of the numbers that we're looking for, adjusted EPS of 26 cents on revenue of $2.33 billion. That would represent 25% year-over-year growth, which is in line with Shopify's previous outlook of a mid-20s percentage rate on a year-over-year basis. Subscription revenue is expected to be up about 21.6% to $621.4 million. Merchant revenue up closer to 27%. $1.71 billion. Gross merchandise volume, the total dollar value of orders processed through Shopify stores, expected to be up 23% to $74.66 billion. They did point out when offering guidance that Q1 is consistently their lowest GMV quarter seasonally. So if you're tracking that on a sequential basis, something to keep in mind. Gross payment volumes are expected to be up 28% to $46.44 billion. Outlook, of course, is always key in terms of what Zacks is expecting. Current quarter estimates of EPS of 32 cents on revenue of $2.49 billion, which would represent about 22% growth. I think that the big question here is how are tariffs impacting its merchants? And analysts will be looking for any insights into how much of Shopify's business is actually exposed to China at this point. I will say BMO did just initiate coverage yesterday of Shopify with an outperform rating and $120 price target. They see a substantial runway for growth on several fronts, but they did point out while tariffs create near-term risk, we believe Shop's core strength is the agility that its platform provides to merchants, saying in our view, tariff-related disruption will make this competitive differentiator all the more relevant, driving accelerated share gains. So, they're obviously looking at it is a bullish reasoning there. Shopify shares, though, up 2% today.
So that's the question. I mean, if you have a likely first quarter that is to be strong, we want to hear what they have to say about the tariffs. We want to see the outlook of the second quarter and the China story. I mean, this is not directly correlated, but we did see Meta, Google, Snap set to lose billions in ad revenue from Chinese sellers as Trump closes that de minimis exemption, right, for the smaller packages that can come in. That could just mean less sales overall for Shopify.
Yeah, no, they had already,
right?
They had already talked about that on the last earnings call, saying that they kind of took steps right away and said that merchants can now display and collect duties during checkout because of the tariffs. And you can also set to shop from your home country using the Shop app and some of the new search filters to try to avoid some of those. But specifically, it's de minimis now, not being allowed from China and Hong Kong, I think, certainly could have an impact. And I'm sure that analysts will ask about that on the call based on what we heard in the fourth quarter as well. Speaking of analysts really quickly, I will say that on the whole, they're bullish. 69% have a buy rating, although we have seen some price target cuts heading into this report. We saw Benchmark lower to 125 with a buy rating. Deutsche Bank is also now at 125. Truist cut to 100. Jefferies cut to 110. All of those are higher than where it's currently trading. Truist and Jefferies do have hold ratings. But we are seeing kind of some price target cuts heading into the report, which might show some of the caution heading in.
Okay, great coverage there. Thank you, Caroline Woods. I saw Deutsche Bank saying Shopify's near-term numbers likely to be better than feared. So let's see what the company has to say. And we're going to trade it. But first, I did tease how much $1,000 invested in Shopify 15 years ago, how much is it worth today? It's basically $19,000. According to Benzinga. I did not do these calculations myself. Scott Bauer, CEO of Prosper Trading Academy. You would take that, right? $1,000 15 years ago and $19,000 today.
I'd be
right?
whistling down the street. That would be amazing. Yes.
So tell us about the example trade. I know you're looking at the charts.
Yeah, and I really, look at this and pretty much say the same thing that Caroline was just talking about in some of these analysts. Long term, I love this stock. I absolutely love this. Short term, there's obviously big questions about the consumer and the tariffs. So I'm very cautious about this earnings report. So based on that, based on where option volatility is, I'm going to put on a position called an iron condor where I'm really looking for the stock to remain fairly stable in a range. So what I'm doing, Nicole, is I'm selling this week's 89, 85 put spread on the downside. I'm also selling the 103, 107 call spread on the upside. So I can do that for like $2.25. At the end of this week, so the end of the day on Friday, my break even range would be anywhere between 86.75 up to 105 and a quarter. Anywhere there, I make money. Below or above those points, sure, I can lose, but this is a 100% completely risk defined position. The most this could ever be, if Shop made a huge blowout one way or the other, is $4. So my risk is $1.75 to make 225.
Right, understood. Okay, well, thank you for that example trade. How do you feel about the markets today? I know we're getting in earnings. We have China talk and Fed Day.
I'm definitely cautious. I know in your last segment with Alex, he was saying that, perhaps Powell is still going to be a little bit hawkish. I personally think that if he does not change his tone and he does not kind of open up a little bit and set the tone that things could get a bit more dovish, I think the markets could run into some problems later.
Do you have a base case of what's going on for the markets in the next few months, or how are you going about trading or investing? Those are two different questions because you're trading
Sure,
and how you're investing maybe really be different, right?
100% different. Trading, keeping things really close to the vest. I'm in and out, not necessarily day trades, but the trades are really short term because we know that at any one point the news cycle can make something really turn. In terms of longer term, I actually like where the market is. I really do. I think that guidance has been less awful than has been expected for a lot of companies. I think the reports that have come out have been pretty decent, but we have this overhang, this black cloud over the markets. It's not just the Fed, it's obviously tariffs. So longer term, I am definitely bullish. Short run, I'm, let's just call it cautiously optimistic.
Okay, we'll take it. Scott Bauer, CEO of Prosper Trading Academy. Nice to see you, Scott.
You
Thanks
as
so
well,
much.
Nicole.